Welcome to the Urban Agorist Podcast, episode number 13. My name is James, and today I have a special episode for you. Today we're going to be talking with a full-time crypto trader who goes by the name of Pavel online. Before we get started, I want to let you know that, first of all, there's a little bit of language in this. We drop some S-bombs and some F-bombs, so if you've got little ears or just a delicate spirit, then maybe you want to skip this one. Second of all, and perhaps more importantly, we're going to be just shooting the breeze about some financial topics. And I don't want you to take this as financial advice because, honestly, I'm a podcaster who doesn't know much about the topic, and Pavel is a guy who got a D- in finance in college. So before you go jumping into any of the stuff that we talk about today, be sure to assess your own risks, take advice from actual qualified financial advisors, and do your due diligence. And with all that out of the way, let's get into it with Pavel. All right, Pavel, thanks for joining me today.
Hey, thanks, James. I'm really happy to be here. First time ever on a podcast, and I'm honored to be on yours.
That's pretty awesome. The reason I wanted to have you on, I've been really interested in sort of the technical and practical aspects of crypto, I guess. And you are a full-time crypto trader.
Yes.
So I'm interested in learning sort of how you got into that, and what I mean. I've never talked to anybody who actually does this kind of thing for a living, even like stock day trading. And I'm sure there's some differences there that you can get into. But first, I guess, just how'd you get into it?
Well, it started in 2017 at the very peak of the last Bitcoin and cryptocurrency bubble.
That's when I lost a bunch of money in Litecoin, actually.
Yep. Nice. Yeah, I bought Litecoin. That was one of the first things I bought, actually. It was Litecoin, and it was, I think, like $330 when I first bought it. And for anybody listening, the price of Litecoin today is roughly 90, although it did get down to about 30 at one point during the crypto winter we had after that insane mania from 2017. But no, so I got in because one of my friends, I was in college at the time, and I just, I've been hearing whispers of, these happenings in cryptocurrency, this insane bull run was happening. And I was focused on school and just trying to get through that. And I came back for Christmas, and one of my friends, he was back too, and he'd been trading for the past 2 months. And he's like, dude, I've been making, all this money. I really think you should, invest some, blah, blah, blah. And that was the day that I bought Litecoin, for $330. And, that was literally I think that day was when Bitcoin was at its all-time high. And the bubble, it was the bubble. It was the peak mania. Katy Perry was sharing images on her Instagram of her nails that were, the various logos of cryptocurrencies painted on them, which is a great top signal. That's whenever media and figures are, talking about cryptocurrency, it's a great top signal. But whenever you're greedy and you're young and you see, these coins are running 100 times, you're like, in returns, people are getting 10,000% returns on investment. You don't care about that. You just run right at it. And, that was a painful lesson I learned over 2017, 2018, I like I said, made a lot of money, and I lost all of it. Well, not all of it, about 90% of it.
That's still a good chunk.
It is. It was. I mean, it wasn't a lot of money, but it was some savings that I had saved up over the years of just working and birthdays and all that shit. And I lost that money, but it was a good lesson that I was like, all right, I can't be greedy. But I was like, there's a lot that's happening here, and I need to keep my eye on it. And so the market kind of proceeded to dump over the next year or so, and I just kept watching it. And I kept at the same time I was looking for work because I was out of college finally at that point. And I finally I was I had a few offers. I was onboarding almost once. I also actually went to work for Fidelity briefly, but and then I just I had an experience with one of the hiring managers, and I had a terrible not getting into that, but it was a terrible vibe. And,
I can only imagine what
it was
what kind of vibes you would get from a place like Fidelity.
God, it was very interesting. But during this time, I'm looking for work and the market's tanking, and I'm here, I am ah, shit. I'm trying to go work for this, this other financial firm, and that maybe knows their shit, and maybe I can learn something here. And and I was like, oh, that didn't work out, and the whole market's tanking. Basically, my life followed the whole Bitcoin chart during that time. Everything was going to hell, and then finally it bottomed out in December and January of 2018 and 19.
Wait, your life or Bitcoin?
Bitcoin and my life, and my Bitcoin and my life, because but that was also the time when I was I've been working part time while I was looking for work, for full time, actual professional work, and nobody, everybody at that point had bailed. My friend that got me in, he cut his losses, and everyone was done with it. But I saw I was hey, prices are really low. I don't think we're going to go any lower. So I started trading a little bit, and in 2019. It really started to run. Bitcoin ran, and the whole, the rest of the alt scene ran. That's when I found Chainlink. That's when I started trading that. I made enough in mid 2019. That was when Bitcoin really ran. That's when I made a lot of money, and that's when I decided, okay, I still didn't have a full-time job. I had only, I've been working part-time and trading part-time, and I was making enough doing that to sort of have income, but not enough to actually, seriously be moving my life forward. And I was I need to I need to go full time and just start trading and just dive into this. And what really helped me was I joined Twitter with an anonymous account, that at Pavel Trades. And I started following these other traders, and I started talking to a lot of traders, and I learned, from them a lot that enabled me to really, say okay, I'm now going to just trade full time, and I'm not going to, work. I'm going to dive into this market. I'm really going to, I'm going to make it here. And, what really got me into the market, and I probably should have got this more at the beginning, is, obviously I'm, libertarian, I'm an ANCAP, I'm all for decentralization. And, I thought it was a good place for me, because it was something that I had this passion for, with my, my philosophical convictions. And I also had sort of this talent for that I found I had, as far as trading and making money doing that.
So how much of it do you think is actual talent? How much of it is luck? How much of it is just anybody could learn to do this?
For me, in all honesty, over the past about 18 months I've been doing it, in hindsight, a lot of it was luck. It was my timing really that was, made me lucky. And it was my timing that was lucky. I think that I don't think anybody can really, even I have trouble, still to this day. I've been doing it for a year and a half full time. I'm still a shit trader compared to a lot of these guys. These guys are so much better. There's a lot of these guys, these are just literal, galaxy brain autists, that just trade so well. And I think there is a component of skill to it. And there is a component of, you need that skill. It is born into you, because a big part of trading really is your emotions. And if you're an emotional person and then you cannot manage yourself and how you react to things, then you can't really trade. Because you can say you enter a trade and you're way up on it. You say you're up 50%, you've made a ton of money, it's way up. A lot of people they'll buy into that euphoria, and they'll say, oh, I'm going to keep riding this. We're going to keep going. We're going to go higher and higher and higher. And that's what I fell into the trap of in 2017. That's what, I thought okay, we're just going to keep, this is going high. We're going to keep going. We're going to keep going. And that's not how it works. And you really need to manage your emotions. And if you can't cut that trade, if you can't just walk away and take your profit, or you can't move your stop loss up, then you can't trade. But I think if you can get your emotions under control, I think anybody can trade to some extent. You may not necessarily be a full-time trader, but you can trade at least on high time frames. And that's really the key thing for a lot of people that aren't a lot of people that want to trade or are interested in it, but they're overwhelmed. I recommend, instead of, trying to focus on like these low time frames where it's really volatile and, there's these insane price movements really quickly, is, instead trade high time frames where it's, it's more technical, it's more analytical, it's less emotional. And, before you even actually do that, and obviously, like, I think at some point, if you are serious about trading, you should put some money down. You should trade, because, paper trading, I highly recommend that anybody who wants to trade, the first thing you should do is paper trade. You should find, obviously, learn a little bit about trading, find techniques, like learn about patterns, indicators, what works for you, and sort of look at charts, find an asset that you think is going to either go up or down based on certain indicators that you see, and write it down. Make a quote unquote trade on it, a hypothetical trade, write it down on paper, hence the term paper trading, and do that first. Learn sort of see if you can at least gauge what's happening. And if you can have an idea of what's happening, at least on high time frames, just based off sort of your analysis, then you can trade to some extent. Like I said, it takes real skill and experience to trade on low time frames and get those scalps, because especially in crypto markets, it is extremely volatile and you will get stopped out. And then, like, that's the thing, like, price, it'll be moving up and then it'll nuke down and you'll get stopped out. You will lose money, and then it will then proceed to go back to the point where you bought it and keep rising. And
can just for people who are kind of newer to the lingo, what does high and low time frame mean, and what does stopped out mean?
Yes. So high time frame versus low time frame is, it's kind of like, high time frame versus low time frame economic preference. But like high time frame is, it's weeks to months to years. And low time frame is anywhere from 15 minutes to hours to days. Even to kind of the time frame, it kind of depends, maybe weeks, but that's the difference between those. And by stopped out, so whenever you trade, whenever you buy, an asset. So say I buy a Bitcoin for $20,000, and I think it's going to keep going higher, but I only want to lose 10%. I think that Bitcoin, I think will only drop. I think if it drops, it maybe go to 18,500. But if it goes, say, below that, then I want to sell. So you set your stop loss to 18,400. That's what happens whenever you set a stop loss, is the position that you have entered will sell at the price that you have set it to sell at, once certain market conditions have been met. So say like I bought a Bitcoin for $20,000. I then set a stop loss for $18,400. That was my sell price. If it hits 18,005, so once it reaches 18,500, I then sell that Bitcoin for 18,400. Cool. If that makes any sense.
Oh yeah, it makes absolute sense. That sounds just like stock trading. Same terminology and everything. What platform do you use? I'm like, obviously you're not on like E-Trade.
So I use Binance, which is the most popular exchange for cryptocurrencies. Mm-hmm. The problem I expect most listeners are based in the US, but if you're not, then you can use it, most likely. You have to have a VPN if you're in the United States to use Binance, because due to regulations placed by the U.S. government and states, due to derivatives that they derivative products that they offer, such as futures trading and margin trading, you have to have a VPN that says you're in another country or some other place. You're in another country. And there is an option though for some U.S. residents to use Binance.us. It's not available in the state that I live in. but it probably is for you and for most others. That's what I use. But some other exchanges that you can use are Kraken or KuCoin. Those are the three.
Wait, I've heard of Kraken. What was the second? The other one you said?
KuCoin. KuCoin. KuCoin.
Okay. Oh yeah, I have heard that. I've heard of it. Okay.
Yeah, they got hacked not too long ago. Unfortunately, I still like it as a for user interface for an app, like on my phone. They have a really good app, but like I said, security problems. They're not the best to use for security due to security. So I use Binance or Kraken. But if you're a little more risk tolerant, then you could use KuCoin. But I wouldn't recommend keeping any exchange. Anytime you're on an exchange, you shouldn't have that many funds on there. And if you have any funds on that exchange that you want to have that are like in safekeeping, move them off an exchange and into a private wallet.
So yeah, like do you have like a just certain percentage that you're dealing with inside of your platform, and then the rest is in a wallet, or is that kind of fluid?
Yeah, it kind of moves around. Like I have a few different wallets that I have my funds in. I move those, between my exchange accounts and my paper wallets and my hardware wallets that I have. So it really depends on what I feel I want to trade with. So say I want to trade with $10,000, I'll move 10,000 from one wallet into my trading account. And, I'll once I'm done trading, once I close that trade out, I will, I'll move from that wallet, on the exchange, back to my own wallet that I control.
Is there some way to keep track of all of that?
You can use CoinTracker. That's one service. There's a few different services that you can use to keep track of your portfolios. I use CoinTracker. Although I will say that I have a lot of my stuff kept track of manually. I enter in a lot of my own things. Like I have an actual physical journal that I keep, like a ledger that I keep a lot of my my movements in. But I also have an Excel spreadsheet that I use to keep track of things. But it can be difficult for people when you have multiple wallets to keep track of your funds.
I've found that, and I only have like a couple, so I can imagine.
Yeah, but I recommend CoinTracker. The only problem with using those services is that you are kind of essentially, if you use your real name and email attached to you, you are doxing yourself. So like if say CoinTracker, I don't know if they do or not. I don't know exactly how it works. Which is why I only have my my accounts that are sort of known to entities that would be interested in that I can't avoid. Such as the IRS. I unfortunately cannot avoid them entirely.
Yeah.
And
I mean, giving yourself cover.
Yeah.
Is probably a smart move, really.
Exactly, yeah. But you could use CoinTracker or another service like that to keep track of things.
Before we started recording, you told me that you're better at investing than trading. What's the difference between the two in your mind? Is it really just the time frame, or is there more to it?
There is a sense of time frame because my investments, I do plan on selling off sometime in the next 12 to 18 months, because that is, whenever I say investing, that is sort of a cyclical play I'm doing. And when I say a cyclical play, I mean like it is a cycle that I'm playing, the bull and bear cycle for cryptocurrencies that I'm playing, because there's a famous chart. You can look it up. It's called the Wall Street cheat sheet, and it's it shows all the various emotions at certain price levels in a market. And I think after, sort of coming in, when I entered, I know for a fact due to price that when I entered the market, I entered at peak euphoria. I know that because that's what I felt whenever I bought that Litecoin at $300.
Yeah, that's really
yeah. And then I felt that despair all the way down to 3,000 or 3,200 Bitcoin, 3,300, wherever it was. And I'm sort of playing based off when I say I'm investing crypto, that's sort of what I'm using to like for my investments. I'm using like that to sort of like gauge the time frames. But like also another thing, like what I say is I'm better at investing is that I have an understanding of where I think for me, it's that I have an understanding of where the space is going technologically instead of necessarily, trading things based off of price action and, charts and indicators and the like. And I think that's why I'm a better investor is that I know what the next big things are in crypto, I think. And so far, the price action on those investments has, at least to me, confirmed it.
How are you coming across that information, or is it just a gut feeling?
A lot of that information is kind of gut. It kind of is in my gut. It sort of is, this. There is, going back to what Vin Armani said a couple episodes ago on your show, and what he says, it's sort of like there is like this energy to things, and there is like you sort of do feel, there is a feel to it. You sort of like you and you only get that feeling by actually sitting in front of the screen, watching charts, watching, actually like reading and learning about blockchains and cryptocurrencies. And the way that I really learned was through Twitter. And I found a lot of guys who sort of knew more than me. I found people that knew more than me. And that's how I really find a lot of my investments is, ironically enough, through Twitter. Is like I interact with people and I talk to people, and I watch. A lot of it is just watching and it's seeing how people act and seeing where the money's going and like where, because some people are, and it takes time to sort of see who's who in a market. Like, and once you kind of realize what the dumb money is and who the dumb money is and who the smart money is, and you sort of see where smart money is going, you can at least deduce, you may not have the best pick, but you can at least deduce where the money's going and what's going to pump going forward. Like, for example, how I sort of got into where I am now, which is where I'm very comfortable with my investments, is last year I found a community of altcoin investors called the Link Marines. They are very, they're holders of this cryptocurrency called Chainlink. That's a decentralized Oracle network. We'll get more into that later if you want to. And they're very knowledgeable about smart contracts and all that stuff. And I sort of started learning from a lot of these guys, because they're very technologically, savvy. And the thing that I found that was different about them compared to other communities, as compared to say TRX or, the Tron community, or even, I don't know if there's any Ripple holders that'll listen to this, but like XRP, a lot of those people, like, was that these guys, they knew what they knew the tech, they knew what they were talking about. And it wasn't this, oh yeah, we're going to go like, we're going to go from a cent to $1. It's like, oh yeah. Like, and there was like, there's a lot of memes. There is that, I think if you're in crypto to some extent, like, yeah, you are greedy. You want those insane returns. I mean, like, don't lie, don't lie to yourself. Like that's part of the reason why everyone is here. We all want to get rich. We all want money. But what I really used for my indicator was like, kind of like, okay, like, well, what are these guys doing? Like, where are these guys who actually know the technology? Like, what are they doing? And I watched them for a while, and, I first saw Chainlink, it was 80 cents. And then, I was sort of like listening to what they were saying, and the market proved them right. And that's another thing too, is that, sort of like if you have a gut feeling about something, and if it seems like it's going to run, then if there's people, okay, let me rephrase that. If you find people who they don't necessarily sound smart, but like they at least say things that over time are proven true by the market. Because when I first, I first, like I said earlier, I first saw Chainlink, it was 80 cents. And it went that summer, it went to $4.50. And I was like, okay, there's something here. There's something, because out of this bear market, after this bear market, everything just sort of like was in the shitter. Nothing was pumping. And then all of a sudden there's this coin that was a couple years ago, like a year and a half ago, 25 cents. And now, despite the bear market conditions, it's up like $4. That's insane. That's not normal. There's something there. And that's sort of like what I use. That's what I used to find like sort of where the market was going. Was like I used these guys who were kind of smarter than me, and still are smarter than me, obviously. And I used their knowledge. Yeah.
Okay. So you're pretty bullish on Link, which did you say that you got into it at 10 cents?
No, I didn't get into it 10 cents. No, I was trading it from the time it was 80 cents up until I was trading it from the time it was 80 cents to the time that it was up until it started running earlier this year. No, not earlier, about mid this year in summer. And then I finally was like, all right, I have some money I put aside from trading. I need to buy this.
Just looking at it right now, it's at about $14, which, I guess I wish I had gotten into it at 80 cents. Actually, I had Link, so I'm definitely not a full-time trader. I'm just a complete amateur. I play with, just exchanges. I'm on Uphold, and I'm only on Uphold because that's where the Brave browser sends you to get your little basic attention tokens. Yeah. By the way, if anybody wants to know that. Yeah, if anybody wants to tip me on YouTube or whatever, use the Brave browser and send me some Brave tokens. Anyway, so that's where I'm at. I had Link, and then I sort of culled my portfolio a couple of weeks ago, and yesterday I found out that you're super bullish on Link. So I was like, okay, what the hell? I'll put a little bit more into it. And actually, it's gone up just since yesterday, which isn't saying much, but. Apparently, I am now the proud owner of a little over 7 Link, which qualifies me for membership in the Link Marines.
Yes, you are a private in the Link Marines.
That's awesome.
This rank.
I'm happy to be. I'm happy to be drafted. Yesterday told me. I said something like, "Why are you so bullish on Link?" And you said, on top of its fundamentals, I have over 700 memes relating to it on my phone.
Yeah.
Shit doesn't get memed by 4chan autists unless it's huge. What else are they memeing on 4chan? What's the next big thing?
DIP, Decentralized Insurance Protocol. That's the one that I'm slowly scaling into a position with. And what that is it's insurance, on the blockchain. It's people or companies directly, offering insurance products to individuals on the blockchain. So I can get, hypothetically, I could get, they're developing a lot of different insurance products right now, and it's various different, individuals, and they have flight insurance. I think right now is one of the ones that just launched. I think they're working, or they have a crypto wallet insurance that they're starting to offer. They have a lot of different products, and that's sort of that's where I have only a small position in that right now, very tiny, and I'm slowly scaling into it. But that's sort of where I see the memes going right now, is towards DIP, and but Chainlink is still like number one in terms of the Pepe memes and everything.
Nice.
Like it's mean to hell.
Looking at DIP right now, so that's mostly like lifestyle insurance, like hurricane insurance, wallet insurance, crop insurance for farmers, which is pretty neat. The other day I was talking to Sal Mayweather, and he told me about DOC, which is health insurance, or something like that. So there's all kinds of different things that are kind of being tokenized. Do you know the sort of technical stuff behind that, or is it more just whatever looks good to you, you're going to trade it?
Well, when it comes to trading fundamentals don't matter. What matters whenever you're trading, well, all right, I say fundamentals don't matter. Sometimes they matter. Like obviously fundamentals do matter. They affect price, but ultimately when it comes to trading versus investing, because whenever you're investing, you're just parking your money there and you're sitting on it and you're just waiting to sell it at some point. And versus trading, whereas you can buy, if something looks like it's going to go, like there's a shit coin, like last week I bought some Tron at 3 cents and I sold it close to 4 cents, and I hate Tron. I think it's one of the shittiest projects out there. I think it's awful, but it made me enough money that I'm quite happy with it right now. But I still I hate it. I don't recommend investing in it, but like it looked good on the chart, and that's what matters whenever it comes to trading versus investing is whenever you're investing, fundamentals matter significantly more against technicals. I mean, obviously, like a technical, like when I say technicals, I mean price action. I will say though that price action, the chart, it does matter, because especially like on high time frames, especially when you zoomed out, because that's really where you see what's happening is whenever you're zoomed out, and whenever you're looking at high time frames, you're looking at years and months. And if you are just, if you're not if you're just looking at this is how a lot of guys make their money. This is how I make my money. Like really quick. A lot of times it's like these quick scalps. It's like there's a lot of shit coins, and like the real purpose of them, like they have these purposes, quote unquote, but really, they only exist to serve liquidity, to traders. To give and that's the difference between investing and trading, is that when you're trading, it doesn't matter. Like, you don't hate it, you don't date it, you just trade it. And whenever you're and whenever you're investing, it's like you're kind of marrying it though. It's like there's a difference. It's like like one you're just kind of sleeping around with, and then the other you're having a family with kids with. I guess it's a bit of an analogy.
It's a great one. I like the don't hate it, don't date it, just trade it. That's a good little rhyme.
Yeah.
How do you tell the difference between like a sort of legitimate altcoin and a shitcoin?
Well, kind of gut feeling at first. It really kind of, it's sort of, because like, like obviously like the more flashy, in my experience, the more flashy and the more marketed something is, generally speaking, the more scammy it is. And if you find an altcoin that has, I'll use Tron as an example because it's so high up in market cap, and that uses a lot of, there's a lot of people that still own it, and there's a lot of advertisements for it, there's a lot of promotion for it on social media, is that the difference really is that there's actually things happening with an altcoin that's truly building something as compared to a shitcoin. There's actual like movement on the chart, like over like I said, zoom out, like an actual altcoin that's building value and is generating value, and is the market is like actually seeing that, hey, this thing is there's value here, it should be going up. Whether it's against USD or whether it's against BTC, and that's something we'll get into in a minute, it should be going up. It should always be an asset that is truly providing value should always be trending up, or, sort of to the side. It should never be going just down like that. It shouldn't just be going down, because it's not providing any value to anyone, because, there's nothing there. And, that's kind of like what, earlier getting back to chain, like that's what sort of attracted me to it, was that, zoomed out compared to a lot of these other altcoins that from the time of their launch, they were way up here. It's hard to see, it's hard to visualize, audio whenever you're talking about it. But whenever, like Tron, like if you look at its chart from its launch to now, it's just a downward spiral. There's nothing there. But whereas you look at, projects like Chainlink and Ren, you see this trend up over time. And that's really a big indicator really is the chart. Looking at the chart is just like, okay, is this trending up? Is this trending up or is it trending down? And, it just because something's trending up doesn't necessarily mean there's value. Just because something's trending down doesn't necessarily mean that it's shit. But generally speaking, that's a big indicator, because, the market really, because if people are just trading something, if there's just liquidity there and no one's holding it, there's no scarcity, then there's nothing driving that adoption, and there's nothing driving that scarcity, which would cause price to go up, because that's kind of the difference between cryptocurrencies and a lot of other assets, is that you take direct custody of them in a sense whenever you buy them and sell them, because you can like I can have a stock on an exchange, but I can't take it off an exchange and hold it actually, no, not physically, but you know what I'm like, in a wallet. And what really sets altcoins apart from shitcoins is that you can see this trend up versus this trend down. And also another thing is looking at the team, seeing how professional they are, seeing how dedicated they are, seeing how dedicated the community is as compared to a lot of these, there's I'm trying to think of something like say I'm gonna Verge. If you look up XVG, there's nothing there. If you go ahead and look up that chart, it's gonna look miserable. It's gonna look terrible. I heard about it in 2017. I just recently heard about it again because it pumped. That's a shit coin,
Man. Yeah, I'm looking at Verge right now, and it is what, in May of 2018 it's at 6-7 cents, and now it's at what, well under a penny.
Yeah, it's like 1/100 of, or it's like
7 1,000ths of a cent, something like that. So what about some of the ones that are kind of in the middle? I mean, if you look at Dash and Litecoin,
okay,
they spiked back in 2018 with everything else, and then they dipped and then spiked a little bit earlier this year, and now they're kind of back on the rise, not meteoric, but kind of holding steady.
Yeah, go on. Sorry.
That's it. That's the question. What do you think about ones like that they're not quite Bitcoin, but they're also not? I think those will go up in value. Dash isn't. I don't think Dash is, or Monero or any of those other kind of those bigger those coins that have sort of held their value from 2017 and before. I don't think they're shit coins. They're definitely I think those are real projects, trying to create real value. I just think that over the next few years, they're going to be overshadowed. I could be wrong. I think maybe a few of them could survive. Obviously, I think there's a lot of room, in the market still for a lot of competition. Okay, but what's the point of them? That's my biggest point of confusion is why would you use Dash or Litecoin when you have Bitcoin Cash, or I understand the limitations of Bitcoin, and it takes forever and the fees are high and everything. So you've got Bitcoin Cash, which is a little bit quicker and lower fees, at least according to Vin, and I know that you've got opinions on that as well. Why do you need these other ones that are kind of in the middle between the shit coins and the big ones?
Yeah, because a lot of these ones that are sort of in the middle, they have that's the thing. A lot of these networks, they're not exactly designed to be the store of value or money that Bitcoin is, and and some of them do compete with Bitcoin, and I think that's why they will exist. Like Litecoin, for example, the narrative is that Litecoin is it's the digital silver, the Bitcoin is the digital gold, which I don't really buy into, but it's definitely like you said, because of Bitcoin's technical limitations, there's still competitors to it, and there will be competitors to it going forward, at least for a while. And I think we've got a while to go before there is, what the Bitcoin maximalists like to say is that, oh yes, you don't need anything else. There's only one, just Bitcoin. And I disagree, because obviously in any market, there's going to be people who want something a little different than everyone else do. There just always is. It's just the nature of people. And there's going to be people who want alternative currencies. And I actually, funny enough, I've used Litecoin for more transactions in peer-to-peer transactions than I have actually Bitcoin ever. And to some extent that does make sense that, maybe Bitcoin is the digital gold and maybe these other ones do, maybe Bitcoin Cash becomes more like cash. And and I'm not necessarily opposed to the existence of multiple ones, but I think that the market right now, and the reason that they exist is that the market's trying to figure it out, like what to do, because nobody, myself included, nobody truly knows where this is going to go,
Yeah.
And I think that, and I think the reason, a big reason why a lot of them are going to continue to exist is because, a lot of people, they have sort of this name recognition. People from 2017 that are sort of coming back in, or people that were aware of the market in 2017 know these names. They know Dash, they know Monero, they know Litecoin. They know these names, and so they're going to come back to them. And I think that's going to sort of provide at least some value, is that people are going to park their money there because they know about it and they think it's going to go up. And I think, that is, unfortunately, and that's just, but also fortunately, because that's the nature of markets, is that this is highly speculative. And I think that's why they kind of exist, is due to the speculation that, things will change.
What about like stable coins? Are they worth anything? I mean, obviously they're worth whatever they're pegged against, but why?
Yes.
Like,
because supposedly, so the idea behind a stable coin is that, for example, with Tether or USDC, US dollar coin, is that supposedly for every unit of that on the blockchain, there is a unit of what backs it up in reserve. So say I have I'm forgetting, I think I think it's Pax that has gold. It's Pax, I don't know what the ticker is, but it's a gold. It's Paxos or something like that. They have an ounce of gold that is pegged to each coin. So in a sense, like, they have that ounce of gold saved, secure at a location somewhere, in reserve, and they have that token issued on the blockchain that, you can supposedly redeem for that. I mean, you can't necessarily redeem it, but you sort of get what I'm saying.
Yeah.
Those listening sort of get what I'm saying, is that, it's pegged to that, and like that it's in reserve. And that's the point of a stable coin, is that it is an asset that is not natively on a blockchain and can't actually be put on a blockchain, but has a representation of it on a blockchain. And I think there is a point to stable coins. I think as long as you have currencies that are not on the blockchain, and you always will, you will never get rid of physical money. And I don't think you should. There's always going to be a place for stable coins to some extent. There's always going to be, like, gold's not going anywhere, silver's not going anywhere. And I think that, what really boils down to for stable coins is, do you trust the person or the entity that has the asset in reserve? And that's sort of the point of stable coins. And like, if you have an independent auditor coming in and auditing you and looking at the custodian of those assets, I would trust it, but like, for example, I store my currency. Anything I have, like, I don't actually keep my money in Bitcoin. I keep it in US dollar coins, which is USDC.
Okay.
Yeah, because and yes, Bitcoin is a store of value, and yes, it's been going up, and I'm kind of kicking myself for holding dollars instead of Bitcoin, in my reserves. But I'm not that, like, what. But I care more about sort of having, like, something that's stable, because I think that my other investments can at least outpace Bitcoin, or I can at least outtrade Bitcoin to some extent.
So when you're setting a stop limit order on Binance, and so is your Bitcoin then converted to USD coin, or?
So there's actually different trading pairs, and that's something I wanted to get into. Actually, was that
that reminds me a little bit of Forex.
Yeah.
So,
Yes, it's extremely like Forex.
Yeah. Okay.
Yes. Yeah. What really got me? Sorry, let me re-say that. What really differentiates cryptocurrency, from other markets besides Forex, is that you have the same asset being traded, against each. Like, you have, it's almost like it's a weird mixture of commodities and Forex in a way, and you have different trading pairs. For example, like, a lot of traders trade Bitcoin against alts, and they're trying to increase their Bitcoin holdings. They're trying to quote unquote stack sats, Satoshi,
makes sense.
Yeah.
Okay.
A sat is, for those listening, a Satoshi is one 100 millionth of a Bitcoin. And, that's obviously, how we break it down. And because okay, if you have size, you're trading with full Bitcoin, but your average person wouldn't trade with a full Bitcoin. They'd be trading with Satoshis.
And actually, there's an app on my phone that gives you free sats for doing little tiny mini games, like you spin a wheel and it gives you 100 sats if you win, or when you make purchases using USD, or you can make purchases using Bitcoin. You just purchase gift cards with this app. It's called Fold. Actually, I think I've advertised for Fold on this show. I have to look, but anyway, I have an affiliate link for Fold, so I'll probably put that in one of in the show notes and on the outro. So I guess listeners can go find my Fold link too. Anyway, it's a good way to just get free sats basically for nothing. You just remember to spin their wheel every day, and you're making little itty bitty tiny incremental bits of money that eventually, you're sending a little bit into your Bitcoin wallet every couple of weeks, and it's just it grows and grows, and it's kind of a good way to get into it if you're not willing to or ready to actually put money into it.
Getting back to what I was saying about the trading pairs.
Sorry about that.
You're fine. No, you're fine. No, I was doing it for myself, not you. Like I was trying to remind myself because I've kind of been meandering a lot today, unfortunately. So like there's a big difference between trading Bitcoin pairs and dollar pairs. So a lot of traders, they trade Bitcoin, they trade Satoshis for alts, and a lot of people, they chart alts with Bitcoin. And whenever you're trading, that's something that's actually, you need to keep in mind whenever you are trading cryptocurrency, is that, not only do you need to necessarily watch the stable coin pair, because I trade with dollars, and I mainly trade futures now, which is it's a little different than spot. It's contracts and, it's leverage and all that. But for that, I use US dollars, I use Tether, which is USDT. And, there's different charts and they affect each other. And for example, and you can also tell what's happening sort of, in the market between them. So for example, say, a lot of times whenever, the joke is that no matter what Bitcoin does, it fucks over alts, but generally speaking, whenever you have an altcoin that is, going up, and that's actually another thing talking about earlier I should have brought up, is whenever you're talking about identifying a shitcoin and an actual decent altcoin, is that is it gaining value in USD and BTC? Because if it's gaining value against because a lot of people trade dollars, a lot of people trade Bitcoin, and those charts are, and if they are correlated exactly, then you have an asset that is extremely bullish, because if it's gaining value against dollars and gaining value against Bitcoin, which is already gaining a shitload against dollars, it kind of signals that, this is something that you want to, park your money in. That makes any sense.
What about utility coins? Are you familiar with those?
A little bit, actually. I'm not as I know a little bit about utility coins. I think Orchid is, I think that's what I'm thinking of, is Orchid. I think Orchid is the closest one I can think of that I might know of, because it's like a decentralized VPN network where they use the tokens for bandwidth and all that. I don't fully understand that one, but I sort of know. I'm not really into utility tokens all that much. The closest thing I can think of to a utility token is the Chainlink token, because it's used on chain for transactions between oracles, between nodes. Yeah.
So does that just mean basically that it's used for something other than store of value or medium of exchange? Utility token. Yeah, sorry, I was thinking about that. No. A utility token, what a utility token really is used for is it's not a store of value, and it's not really money per se. It can be a currency, and it is used for on network transactions, obviously. But utility tokens, and this is kind of the interesting thing about blockchain, is that
these assets aren't necessarily like shares necessarily per se, but like they actually function as the collateral for actions on a decentralized computer network, essentially. And I'm not really super into the technology and like, the applications necessarily of a utility coin. That's not my area of expertise per se, but I do know that there is some really interesting things being done with, as far as like using like tokens and utility tokens like for like decentralized computing, and all that. Yeah, that's not really an area I know that well.
No. Okay, great. So do you have any experience with or know anybody who uses trading bots? Are they a gimmick?
Oh.
Are they legit? Is it seen as cheating in the trading community? Or?
No. Algorithms are accepted and they're part of the game. I know several algorithmic traders. These are guys who are, they're smart programmers and they're really good traders. And, and if you can and that's the thing, if you can build an algorithm that actually is profitable, because it's hard to build an algorithm. I could never do it. I'm not savvy enough.
Sure.
But, anybody that is actually skilled enough to do it and, like make one that's profitable, like it's not necessarily frowned upon. And I know guys will develop algorithms and then sell them to people or make them public. And eventually what happens though, generally what happens with algorithms, and this is why you can't rely on algorithms, is because more people use them and, other algorithms pick up on that. And eventually your algorithm gets factored into the calculations and you're just another part of the market and you don't have an edge anymore. And which is why, it's, algorithmic trading, not frowned upon. It's totally acceptable. But it's definitely, it can't, the best algorithms, they can't really replace, your gut and like, like that human component to trading.
And the 4chan memes, of course.
Yes. And the memes, you can't account for memes.
The thing is, I thought you were kidding about that, but I think you actually are serious. Like,
about memes?
Yeah.
Yeah.
That's really a way that you would say to someone trying to get their feet wet in this.
Yeah.
Look to where the 4chan traders are placing their attention.
Absolutely. And that's the thing though. Beware though. A lot of times with Biz and the 4chan types is they will pump up coins that are bullshit, you have to be aware of that. But if it's something that's consistently done over time, like for example, I know for a fact that during 2017, 4chan was on Biz, they were memeing a lot of coins, into pump and dumps. And so you have to be wary of that. But over time, if there's consistent memes, and it kind of goes back to the whole mimetic thing that we were discussing earlier, is that if there is really like a lot of meme energy around something, then that means that there's something happening there. Like you can't, like the fact that for the past 18 months that I've been watching it, the autists, on 4chan have just been cranking out memes about Chainlink, and the price has just gone up over time, and the memes keep getting better. Like that's the thing. Like they're not stopping. It really shows that there is something there, and and I it's really weird to think that the Egyptian god frog of chaos is a great indicator of where things are going to go.
Look, I mean, if our money's right and we're in a new age of magic, there's probably no better spell for this kind of thing than memes. So
exactly.
So is Biz the board to go to if you're looking for this information? Are there others?
Biz is a good place to go to. I mean, obviously Twitter, Twitter is anybody who's used Twitter knows that it's a cesspool, and it's hard to find a lot of information. But if you can find a good community of people, like if you can find any crypto people, like you can find on Twitter, like crypto Twitter is a thing, and it's a very big thing. And obviously I'm not a big part of it. I only have a couple dozen followers, and there's a lot of big accounts, but that's really where a lot of the shit's happening. If you can just like find, and obviously, you were going to put my handle in the description. So, if anybody wants to, just go and just peruse the accounts I follow. A lot of them are shit posters, but some of them are really skilled traders too. I mean, and you'll see a lot of like the same thing. You'll see what I'm talking about. There's a lot of this meme energy going on.
Yeah.
And there's a lot of like, there's a lot of magic happening for, like for a lack of a better term. And I think actually that is the most accurate term. It kind of is this magic that is happening.
Other than finding who you follow on Twitter, which I'll definitely link to that. How else do you find people on Twitter? Like, what do you search for certain hashtags or? Yeah,
you can use cash tags. So Twitter has hashtags, obviously, but a lot of people don't know this. That Twitter also has what's called cash tags, whereas instead of putting the hash or the pound sign, you put $1 before something. So like say like there's financial and stock Twitter, so like you can like type in like do a cash tag like. Like cash TSLA for Tesla, and you can find like all sorts of tweets about Tesla, and
you've got a cash tag link on your Twitter bio, so that'll be a good example for everybody.
Yeah, and if you tap that, you can find the Link Marines, and you can find all that. You can and like and a big. Keep in mind, there's a lot of bots on Twitter, and you definitely need to keep your wits. And that's the thing about cryptocurrency. Is that you need to keep your wits. I mean, it's just investing and trading in general, but really crypto because of the scams, they're abundant. And as anyone who knows anything about this, like who's, like from what I've said, if anybody can glean from that, it's pretty fucking scammy. A lot of these projects, but I was meandering there, kind of lost what I was saying.
Yeah. Okay, and here's another good cash tag that I found just right now clicking around. So I clicked your $ link.
Yes.
And the cash tag just $alt gives you
a
ton of good altcoins. But the thing is now, how reliable are these people? How do I know who to follow?
And that's the key. You have to watch people. You have to be present, and you have to, like feel it out and see, like it's sort of like just watching. You have to lurk. And it's just sitting there and being patient and just absorbing. That's really like a lot of, I've realized like, kind of like looking back, I've kind of just been like meandering around a lot of these things. I've sort of just been like giving these long winded, descriptions. And like what I've sort of like, kind of realized past few seconds, like now I'm saying that is like a lot of like this information you can really only get by sitting there and just like absorbing it and just like feeling the energy, quote unquote, and like just reading and seeing what people are doing. And like, if people are consistent, if someone is open and honest about, like what they're doing, like for example, for Link, a guy I like to follow for Chainlink stuff. He's it's at Squatch Crypto. He's really good. He doesn't follow me or anything, but he's a big Chainlink account. He's really good. For traders, I guess if you want to get another suggestion for people, it's Loma. He's a really good trader to follow as well. Like sort of like just like a jumping off point, but it really kind of is like you gotta find people and just follow them and build trust up over time. Like let them build trust up with you, with their calls and with their takes, because you can't just you can't just get that information just by looking at, like, you have to like follow it. You can't just like sit there and be like, okay, yeah, this is what I need to do. Like, this is like, you need to absorb it.
All right. Yeah. So what else? You got any more advice for the aspiring or terrified investor / trader?
Yeah, I wrote down a few notes.
Oh, good.
Yeah, actually. Yeah, so like whenever, like, if you actually want to get started, and I never use my notes at all during this, but obviously I would recommend, if you want to get started, use a VPN. Definitely, like, you want to mask yourself as much as you can, stay anonymous as much as you can. Get your money off exchange now. If it's not your keys, it's not your coins. Because when I say that is, if you need the private key to the wallet. And what I use for my most secure wallet that I use and I recommend others use it's a hardware wallet. It's called Ledger Nano S. It's by a company called Ledger, and you can buy that online. I think they're $60. They're not that expensive. It's worth it, especially if you have significant holdings, because if you have money on an exchange, it could get hacked. It could get taken by the exchange. You could get seized by authorities somewhere. And if whereas if it's your hardware wallet that you can hide, or you can place somewhere, store somewhere that or if it's a it's a paper wallet where it's an actual string of it's an actual key you can remember or write down somewhere, definitely get it off exchange. And what else? Yeah. Oh, and your security.
And it's important too, when you're purchasing a hardware wallet. I learned this actually while I was looking at them, to actually buy the wallet from the manufacturer, I think.
Yes,
rather than like Amazon or whatever, because you never know where they're coming from.
That's exactly what I was about to say. Yeah, absolutely do not under any circumstances buy a hardware wallet from any source besides the company website, and make sure it's the actual company website you're buying it from. Yep. Because I've seen examples of very legitimate looking scams where they have these wallets, they've purchased them and then they send them out to people, but they've loaded them with malware before, and they've cracked, they've altered them physically in some way, that there's like actually on the motherboard, like in the wallet, there's a flaw.
And just as someone who has done his fair share of selling stuff on Amazon, I mean, it's one thing. I've sold everything from electronics to diapers on Amazon. Obviously, I've never scammed anybody, but it would not be difficult to do it. I mean, just open the box, load it up full of whatever, shrink wrap it, and send it to Amazon's warehouse, and you're set. So, that's happened a lot. And also another thing is another avenue, just for anybody else, is to be wary of is two-factor authentication. I've seen your phone. People think that because their phone is connected to the trading account that it's somehow safe. It's not. You need, just like it's generally safer. It's nicer to have your phone attached, but like you are still susceptible to a SIM swap attack, where someone will call your telephone provider, and they'll lie and they'll pretend it's you, and they'll somehow get access to your phone number, and they'll get your code. They'll get your two-factor authentication code that the exchange will send to you, and they'll log in and they'll get your stuff. And that doesn't happen to people unless they're more well known, because it takes knowledge of who has holdings, to sort of get them. But yeah, that's just like something you have to be careful with, is two-factor authentication. So if you do have any two-factor authentication services turned on, I recommend, even though it's Google, it's still slightly better, is Google two-factor authentication, because you can at least, because they've got a specific app. It's not just sending a text to your phone number.
Yeah, exactly. It's and it's a little more secure, and it's tied to that device in a lot of ways. And there's only like one backup seed for it, and it's given to you. It's a little more secure, or even more secure than that. I forget what it's called, but there's actual hardware two-factor authentication devices that you just plug into the USB port, and that is also like the best way to really secure any like trading accounts, is like with a hardware two-factor authentication device or Google Authenticator.
Cool. Yeah, I use Google Authenticator for a lot of stuff, actually. It's great because the authentication code changes every 60 seconds as opposed to who knows how long that one that your bank texts you will last.
Yeah.
So,
yeah.
All right, cool. Well, I'll make sure to link to your Twitter feed, your Twitter account. Is there anywhere else that people can find you?
Nope. Just on Twitter. That's just my my account, which if anybody's looking for some amazing knowledge there right now, it's kind of just shit posts. If people start following me, I'll probably start I'll start tweeting a little more useful information.
Okay, perfect. Out. But yeah, your memes are great too. So
thank you. I appreciate that.
Speaking of your Twitter, I wanted to ask you, for the record, did you actually get a D- in finance on your second try?
Okay. Yeah, actually, it was not a D-. My school did not offer D-. The lowest grade that I could get and pass was a D. Although if it was at a school that offered that had the didn't offer, but had the D minus and the minus and the plus system, I would have got a D minus.
Great.
Yeah,
that's super relatable. I failed accounting once and then got a D in it and kind of passed. I'm not sure if I ever actually completed my accounting credit, and maybe they just let me graduate. But anyway, so yeah, we're both kind of finance and accounting tards, so that's awesome.
Oh yeah,
let's get rich on crypto together.
Oh hell yeah!
Thanks so much, Pavel. It's been a pleasure talking to you, and I will see you on Twitter and elsewhere.
All right, thanks, James. Thanks for having me on. I really appreciate it.
All right. Thanks again to Pavel for joining me today. After we stopped recording, he gave me one last piece of advice, and it's a pretty important one. So I'm going to go ahead and let you know that he would advise against trading with leverage until you're consistently profitable. And if you do trade with leverage, then be sure that you keep that leverage pretty low, because man, if there's one way to lose your shirt pretty darn quick, it's getting in over your head with money that you don't actually have. And with that, I'm going to have a ton of links to some of the things that we talked about. I also created a list on Twitter that you can follow, and it contains a whole bunch of crypto traders and that sort of thing. So if this is something that you're interested in, follow the links in the show notes. I did sign up for a Binance account, and there's a ton of education on there. So even if you're not going to be trading, so it might be worth it to sign up, even if it's just for the educational opportunity. Also, on Monday's episode, I mentioned that I'm going to have some big announcements coming for the show, and I promise you I will have those coming. Not everything is set in stone as of yet, but there's going to be a bit of a rebrand of the show. I'm thinking that urban agorism is probably not the permanent direction that the show's going to go. So given that I'm only 13 episodes in, I figured I would go forward with a rebrand for kind of a more holistic approach. I won't be changing too much of the content that's already out there. We will continue to focus on living free, self-sufficiency, things like today's episode where we're interviewing people who are making money on their own. But in keeping also with the interview that I did with Vin Armani a couple of weeks ago, I'd like to go in a direction that maybe getting into some spirituality and some other more kind of esoteric topics. And to that end, I think that probably it's early enough in the stages of this podcast where if I were to do a rebrand, I wouldn't lose too much of my audience and actually might gain some audience. So if that's something that interests you, feel free to reach out. If it's something that you're totally opposed to, also feel free to reach out. The best way to get a hold of me is to DM me on Twitter. That's @JamesLJ. You can also find me on MeWe, various other social networks, but Twitter's probably the best. And with all that being said, until next time, as always, live free.
This is the way